about to tell you to not buy a house. Yes, you heard that right. Buying a house isn't always the answer. It's not always the best investment. We're going to talk about that today and why renting might be a better option. We're also talking about how we have the lowest turnover of home sales that we've seen in a while. We're going to take a closer look at that. So thank you for joining me, and thank you for all the well wishes and congratulations. I'm doing great, baby's doing great, and I'm excited to be back here with you guys talking about the real estate market. So let's jump in. The old buy versus rent rule is officially dead. We break it down. So what they're saying here is not necessarily not to buy ever, but unless you plan to live in a home for 7 to 9 years, it is not worth owning a home. Actually, renting will be more affordable. Now, this does vary market to market. In particular, they're saying places like San Francisco, New York, it's 15 to 20 years. So if you're not planning on living in that house for 15 to 20 years, it's not worth it to be buying. It is more affordable to actually rent. Now, it's not super shocking because this rent versus buy has flip-flopped a lot as affordability has changed. But for the most part, when people talk about long-term ownership and that kind of thing, buying can outweigh renting. But this is really, it used to be, I think they say in this article, I'll have to find exactly where, but it used to be if you were going to live in your house like 3 to 5 years, it makes sense to actually buy versus rent, but now 7 to 9 years. So if you don't have plans to be there for a while, you're going to be spending a lot more money buying rather than just spending money in rent. And most real estate agents are not going to say that. They're going to say buying over renting, but I think it really depends on your use of the property, right? It depends on the length of time you're going to be there. It depends on your financial situation. Buying is not always the answer. Which brings me to affordability, the hot topic of the last few years. And I wanted to share this article from Housing Wire because it's specifically talking about affordability for first-time home buyers, but it's calling out the fact that it's not prices, it's not rates. It's a combination of prices, rates, and other factors as well that are changing, that are making affordability for homeownership really, really challenging, especially for first-time home buyers. So one of the things that they talk about first is the rising cost of homeownership being homeowners insurance. It's one of the most potent affordability headwinds. They're saying premiums have surged nationwide. Obviously, there's areas like Florida and California where they're having the most impact. But in general, that homeowners insurance is really impacting affordability. Now, it's not just homeowners insurance. It's also looking at some stricter regulations on financing and underwriting, which has put more borrowers into a situation where they have to get an FHA loan. With FHA loans, there's mortgage insurance, and that makes it less affordable for the buyer, especially on a monthly basis. They also talk about consumer debt and that we're seeing a lot of first-time home buyers with higher debt than we have previously, which is obviously impacting their affordability in a number of ways. We're also seeing wage growth not keeping up with home prices. They're saying, according to USA Facts, home prices have climbed roughly 74% since 2010, while wages have increased only 54% over the same time period. Now, again, market to market, this can vary a little bit, but generally, we aren't seeing across the board wages keeping up with home prices. And then we also have debt to income, which is a little bit more strained because we have all of these additional costs that we just talked about. When you look at the bigger picture, those can affect the ability for a buyer to actually get an approval at a loan amount that would even make sense for them to buy based on where prices are at. So it's really the bigger picture of everything coming together that is a factor in affordability, not just rates, not just prices, but there are a lot of other things to consider as well. Leading me back to where I started, if buying a home is a big stretch for you, it's probably not going to be the best thing for you to do in the first place, let alone if you're going to only keep it for a few years, we now know that 7 to 9 year time frame is really where it starts to make more sense to buy versus rent. So consider your situation before you're jumping into the housing market and, just knowing that it's right for you. If it is something you're considering, I have a few tools for you that could be helpful. You can check the description for a mortgage calculator or set up a discovery call with our team where we can talk through some options with you. Now let's talk about rates. The Fed did another 25 basis point cut last week. This article says mortgage lenders prepare to scale up. So as we've talked about before, when the Fed cuts the rate, it doesn't mean the mortgage rate goes down. Oftentimes the rate actually goes up because it's in anticipation of that Fed cut is where we start to see movement in rates downward. But in any case, last week the Federal Reserve met, they cut the federal funds rate by 25 basis points. So what does this mean for you and for the housing market? Basically, they cut the federal funds rate to the lowest level in 3 years. We're also seeing a softening labor market and inflation pressures. They also ended quantitative tightening, which is something that they've been doing for the last few years. And really, this is a pretty significant policy shift as they're trying to stabilize growth amid all of the uncertainty. Now, we do expect another cut in December. They say combined with a shift in the Fed's balance sheet strategy could bring additional relief to mortgage rates, which are now at their lowest levels of the year. If we take a look at where they're at today, they did spike up a little bit from where they were at the end of October, but we're at about 6.33%, which is still really good considering last year at this time we were at 7 and above. So we have definitely seen, over the last year, some easing in the mortgage rates. Now they're really keeping an eye on the labor market as well as inflation because those are indicators of the strength of the economy and what's going on there. That will also, dictate how they're going to move forward, whether it be next month or going into 2026. All in all, this article thinks that we can start to see some easing in mortgage rates. I, again, am not sure we're going to see anything below 6% for the rest of this year. Could be wrong, but that's kind of where we're at as far as Housing Wire is concerned and my opinion on the topic. Now, I said we've had one of the lowest turnover rates in terms of home sales this year, and I feel kind of like a broken record because I think I said that last year and the year before, but let's take a look at what's going on. And by the way, if any of this is helpful for you, consider subscribing and joining our community. I am here every week giving a market update. Only 28 out of every 1,000 U.S. homes changed hands this year. This is the lowest turnover in decades. Again, I feel like I've said this every year, and every year seems to beat the last year. But this is from Redfin. It's looking at things on a national scale. We're going to look at sales here in Phoenix as well. Just 28 out of every 1,000 homes changed hands in the first 9 months of the year. It's the lowest rate since the 1990s. They're citing affordability challenges, uncertainty about the economy. Homes turned over the most in Virginia Beach and West Palm Beach, Florida, while turning over the least in New York and Los Angeles. So only 2.8% of homes changed hands. So as they look back in time, going back to 2012, it was 33%, 2013, 37%. We saw a peak, of course, in 2021 where it was 44%, which is kind of crazy to think that almost half the homes changed hands. So where are we at in Phoenix? So if we look at the sales per year for the Phoenix metro area, the pink line is 2025. We started out below 2024, but we've actually stayed pretty consistent, much higher than we were in 2024 and have increased the last couple months. So although the Redfin article is saying that this is the worst we've seen since the 90s in Phoenix, it appears that we're actually performing better than we did last year, which was one of the lower years. And I know 2023 was pretty low as well. And you can see we're lower than 2023, but higher than 2024. So, still not off the charts by any means or, going back to those 2021 numbers, but we are seeing more sales per year here in Phoenix than I guess they're seeing on a national scale. Speaking of the Phoenix metro area, I wanted to share some local news. I always get a lot of questions about the TSMC plant and what is going on there. It appears that they are going going to bid on more land that would nearly double its Phoenix real estate. Bidding for 902 acres will start at $197 million. I don't have access to the full article here, but if you're not familiar, Taiwan Semiconductor is a huge plant that has been built around the 303 and the I-17. They've been expanding like crazy. Not only is it this plant, but they're also building kind of a mini city in a way with, shops and offices and apartments and all of that stuff in the area. And then it looks like they're getting some more land to continue to expand. So I get a lot of questions about where to invest. There's a lot of great areas of Phoenix, but this kind of North Phoenix area is somewhere that I think is worth keeping an eye on because of the expansion that we're seeing here. Now let's take a look at the CMI. I missed last week, so this is big news for me to see where we're at after missing 1 week, but we're at 78. So we are still in a buyer's market here in Phoenix. Demand is at 81, so we're about 20%, 19% below normal on demand. Supply is 103.8. This has climbed up a little bit, so it's about 3% above normal. Still not a ton of movement in the CMI, but we are definitely seeing that the supply is outpacing the demand. That's what's putting us in a buyer's market all across the Phoenix metro area. As you guys know, every city is a little bit different. We have a mix of some red and green arrows here. The overall change month over month this week was negative 2.1%, and last week was negative 2.6%. So actually, for the last 2 weeks, we have seen the CMI trend more towards the direction for sellers. We had been trending more to the direction of buyers, meaning the market was moving more favorable for buyers as a whole. The last 2 weeks, it's kind of shifted back to a more favorable situation for sellers. Now, keep in mind, you're probably not feeling this in the market. This isn't something that you're just going to see, but we can track the numbers and how these are changing with this index to kind of see any trends. And so right now, that's the way things are swinging. We'll see how long that continues. My guess, it's going to kind of taper off a little bit as we get closer to the holidays, but we will see what happens. We also haven't taken a look at the contract ratio in a while. So I wanted to look at this and see where we're at. And what I find interesting is if I just back this up a few weeks here, there's a lot more blue. And if you look at this key here, the blue is like cold markets, coldest, etc. So we have a lot more blue in kind of central Phoenix here about a month ago. Well, that's less than a month ago, but in October, right? And if I even fast forward just a few weeks, you can see the change that we start to see more green surrounding a little bit of change in central Phoenix and then more green surrounding, which indicates a balanced, warm market. So you're seeing some of these zip codes flip from being cold to a little bit more balanced and warm. If you've watched my channel for any time, you know that I do talk a lot about assumable mortgages, and I wanted to give a shout out to one of my listings that is assumable. If you're looking in the Moon Valley area, we currently have a home on the market that has an assumable rate. It is a VA loan. If you're interested in that information, check the description below to get a little bit more info there. It's great to be back talking about market updates again. Thanks for giving me a week off so I could enjoy some time with my family. I appreciate all the support, and I will see you guys next week on my next market update.